we're still in sort of a favourable environment, right?
Yeah.
For the European banks, negative rates was damaging, right? And
they got a load of free money, though, from the central banks.
wasn't enough to compensate for the rest,
okay.
right? So we're still in that space where rates are in a decent category. As you say, as rates are coming down, net interest margin on average will come down, but it also releases the pressure on corporates and consumers, so the non-performing loans will probably do better. So it's all a question also of the extent to which the central banks will possibly have to steer or oversteer, right?
Yeah.
If we get into a more recessionary scenario in Europe and the ECB dramatically lowers rates, that again would not be such a good scenario.
Feels
for the
like
banks.
we're in a recession or have been in a recession I will be very broad here, Scandinavia and Northern Europe as well. Southern Europe, it's a bit more checkered actually. Italy's outperformed, Spain's outperformed as well. Northern Europe and Germany look like they're in trouble to me.
Germany is the big one, particularly, right? And when we talk to our clients, sort of the Mittelstand, the core of the German economy, there are increasingly pockets of stress, you could argue, right? For all the reasons that we know. Exports to China, higher energy prices and so forth, geopolitical tensions. That's something to watch for sure.
I hate to be an echo chamber on this channel, and as you well know, I like to challenge my guests to it, but I can't help agreeing with you on something, and that is why European banks, pan-European banks, are now a necessity as well. They've tried it many times over the years. A lot of them licked their wounds and just didn't like it. The British banks down in Spain, the Spanish banks in the UK, German banks everywhere, Italian. We've seen it. The incarnation was pretty tough for them. But 2.0 could look very interesting as well. But do we need, before we see more action from the likes of Andre Ochel, do we need actually something structurally to change in Europe?
Well, Draghi laid out what change there is required.
Draghi, yes. Letter, yes.
Yes.
But actually, I'm talking more about stuff that's been around way before Draghi started talking about it.
So it would be helpful to have EDIS, the European Deposit Insurance Scheme, right? It would be helpful to have a common backstop. It would be helping to have branchification, which means easier flow of liquidity across all the European markets.
And it would help the Mittelstand that you've already mentioned.
Look, that's my point. The idea that bigger banks primarily serve the banks is a fallacy, right? Because if you keep ring fencing in the banking system, basically keeping national markets to their own, you create pockets of stress. There's less liquidity flowing in and out. There's less competition. There are smaller banks, lower investment budgets, and ultimately higher prices for corporates and consumers.